Good morning, traders. Let's get rocking and rolling. Can you say sell-off? That's exactly what we have seen. With strength, let's start off by just taking a look at our higher time frame chart. Welcome to VPT Live, pre-market analysis. We're going to look left right here. Last line of defense, I'm going to pull this bad boy down, 20, 30, 50 S&P 500. Daily bar chart, gone, gone, and gone. You see that we put in an effective symmetrical double top on the S&P 500. This is the June 2015 contract. If we break below, close below today, then where are we headed? So right here, from this swing high to this current swing low, that's still an active leg. So I'm going to take this swing high. I'm going to invert my fib analysis, look left, and find the static swing. So there's market structure. There's a swing in the market. If we break below, close below 2030, then likely we're going to go see the 2010s and then secondary 1965s, or 84, I'm sorry. So look at the 1984 right there and then look left. I'm going to drop this level down right here. We'll look at the literal swing lows of these daily bars. Crop the wicks on that one. We opened here, went to new lows prior to a rally. Right here, the swing low. Right here, again, we traded below it. So 1974 to 1984, nice extended targets on any short entries. Okay, so let's get rid of this. Let's get rid of this. We're looking at average true range. Note right here, ATR's increased. We're at 25.5 points a day, S&P 500. Bottom line is intraday right here, daily, key level 2031. Our lowest low so far, the morning session, 2033 quarter. So any move to that 2030, actually let's just say 2029 to 2031, low risk opportunities. We're already in the SPY calls. We'll look to possibly add. So big key level S&P. Now let's take a look real quickly. The last leg up, all we did was hit a retracement of that. There's the sore thumb low that proceeded to drive to that new structure high. And you can see right here at this level is just below the 50% Fibonacci retracement. So daily, average true range 25 points a day. Current, we've already traded from 56 down to 33, so we're 23 points off the highs. We're approaching 100% ATR. We'll be at 110% ATR as we test 2029 if we do. Real quick, let's go take a look at another market that's sold off, NAS to the DAC. S&P traded back to those previous swing highs, held the lows. Here's the Nasdaq testing our previous swing lows that came in 313. We traded below and have not closed below. Look left right here. We already had our key price point set up at the 42.72s. This is from the daily bar, and because of this dramatic sell-off the last 4 days or 3 days, and this is the fourth, high probability here that we at least get a little snapback to 334s. But again, this is where we talk about that great risk-reward opportunity. So first and foremost, let's take a look. Where's the market relative to? We're at absolute swing high here, 272 that proceeded to move almost 100 points. We traded back to it, stopped on a dime here. We then opened on it, closed above it, and from there we went 272 straight north, 200 points in the NASI. We pulled back down right here, got within 10 points, and now we've tested that during the Globex session. So a 57-point average true range in the NASDAQ. So the question is, if I buy this right here on a swing trade and risk 1 ATR, so 269 minus 57 will pull us back down to around here. Then, if I buy this level and we do nothing more than just trade back to this price point, we've got basically 200 points of opportunity. So 1 unit of risk on the long entry and 4 units on a retest here of potential reward. Now, again, markets look bearish at lows. We rally, boom, higher high, higher close, higher high, higher close, higher high, higher close. Slightly higher high, higher close, higher high, higher close. 5 days of 6 on new highs, and yet it looks the most bullish at the tops. Inside candle, roll over. So all three of these indexes are going to be setting up same type of visual price pattern at extreme swing lows. Dow Jones traded below our 545 handle intraday so far. ATR up at 229. Again, let's just use the 17,550 for easy math. Back here to 18,000 obviously is 450. That'd be 550 points of opportunity if I risked 100% of the average true range, which again we've already put in, gang, 100% ATR. And then I get a 7-day reversal right here. Again, I'm risking 220 to make well over 5. So extreme areas right here across the board. All right, that done. Let's go take a look at our 1500 tick. Like this long entry right here building on crude oil. Already had my turning point black tip on the 1000 tick. Put in a lower high followed by a retest. We got our classic bullish divergence at the bottom. So I'll put this on in the swing trade. Should have been long from a little earlier, but I'll do an adverse excursion add-on and see if we can get a bull rotation and a pop. Now you'll note right now that stops are below $50 or need to go below $50 crude. So I'm going to go 93 on partial, 98 on the other part, and then from the entries right there at around 34, I'll look for a minimum right here, 57 to 59, kind of respecting this swing high. And then we'll see if we can get another move. Symmetrical double top here, popped. We've got a big DSR level at 52.40, but it's going to take a lot of time, obviously, to get there. Already moved significantly this morning. Swing highs, 250, all the way back down, lowest low, so 2.4, 240 ticks already in crude oil. Now let's take a quick look here. Go grab our daily ATR in crude, gain some perspective. And my suggestion is that we're likely average true range right here, 220. So we've moved 110% of the average true range already. Okay, so love to see that 120% ATR move and then these types of opportunities. We've talked a little bit this week about pattern trading as well, and here you can see classic. Here is a decline. See how that RSI buries itself oversold here. Notice I've got my turning point, 1, 2, 3 bars later, the black tip. We pop up, pull back down, I make a lower low in price right there at my big Mo in a bull market, and yet as I make that low, you can see here I've got bullish divergence on that RSI. Now let's see if we can take out that swing right there and possibly drive to new structure highs. Look left. We're going to drop a horizontal. You'll note structure here. I'm going to go slightly higher. We drove here, double bottomed there before we got a nice rally. So you'll note structure support led to this new high. We came back down, stopped on a dime here, came back down, stopped on a dime here, drove through it. So again, your verbiage is new structure low, lower close, previous structure support, anticipated resistance, bada bing, bada beautiful. That was the swing high prior to this. And let's just go ahead and take a quick $200 right here while we're teaching. Now what I will do is I'll lay this back out. I'll do a 2-lot lower. I'll go 50.06, and then we'll let the balance of this one run. So it's an if-then probability. If we pull back after this swing high holding, then I'll add to the position. And if not, and we continue to run right here, then I'll go ahead and lift this guy and just let this run. 51.93, look left right there. So actually I'm going to go 51.78. I want to respect that swing that was held again here. A little bit of a left shoulder neckline, head neckline, tried to get back up on the right shoulder, and then some failure right there. So nice quick little pop there in the crude oil market. All right, now back intraday, we've shown some bottoming patterns down here. I've already traded to the buy side of the Dow Jones, the S&P, and the Nasdaq. So you'll see here our key price point that we just discussed on the Nasdaq. Long and short right here, early in the morning, long entries right here, partial profits there, and then took the balance off. I went short right here and basically broke even, maybe down 2 points. So any move back down to this 42.70 handle, More importantly, my range trader, note right here, we've gapped lower, or we will gap lower on the open 6 minutes away. This level right here, gang, key price point, our black horizontal, 43.22, gap fills at 27. So if we were to get back into this gap fill, we've got structure, nice area right here for potential sell signals, and then see if we get a continuation move. Euro. Was short the euro right here. Got short right here with my Stoke signal. So this is the Stoke in the background, 3 different stochastic oscillators in play there. Covered them down here, got short back here, and still short probably 2/3 of the position. Let's see if it's in this one. Survey says this one, this one, and hang on one second here. Long crude oil, boom. Level 2 strat Momo. So that's the one running the strat. There we go. All right, so got back short. Going to add to that position right here, and you can see that my buy stop is just 2 pips above. So I'm going to look for a continuation move back into these lows and then possibly that 109.60. All right, so set them and forget them. We're going to see some good opportunity today. Already seen some great volatility. Again, remember, embrace the volatility. Volatility is our friend, those directional moves. Congrats. Some of you guys had your biggest days ever yesterday. And a couple of you fell in love with the S&P 500 again. Gang, also here real quickly, crude oil. We just popped that guy on at 50.33. You see we took plus 18 on half and then plus 23 on the other half. So a quick $400 there. Still playing around at this level. So I still like this 50.21. I'm going to place the buy limits back in. And we'll look to just bid them up right here against these lows. 50.21 in crude oil on the bid. We popped up right here. We had our resistance hold at 50.86. Again, we discussed that level. Here it is here, 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 here. We just retested. Okay, so again, kind of a sideways consolidation, kind of a squeeze, if you will. This is where your Bollinger-Keltner, that classic squeeze play, this would be tightening up. Not a question of if we're going to break out of this channel, just when and which direction. Obviously, if we break above, close above, and we get a continuation move, that'll be with trend. The other thing, gang, we talked about yesterday, we identified this bull pennant in real time as it's set up. So I drew our high-to-high trend lines in here. We looked at our low-to-low trend lines here. And then we talked a little bit about tendencies. So when this breaks above with the underlying directional trend, our big Mo is bullish and blue. Slight upward slope. We pulled right back into it. You'll note we got our color rotation, black to white, indicating we're moving into bull market. We pulled right back down to that high-to-high trend line extension right here, where it met our DSR level, our big Mo. So basically, let's just call it a 110 entry. And from there, we go straight to our first target for 20-plus pips at the DSR level, and then did pop to new structure highs here at the 110.63s. Now, you can see right here, we're pulling back down in. So I'm going to lift our key price point right there. We'll look at 109.65s in the euro. And then finally, let's take a quick look at the Nasdaq. Beautiful visual example right here of the power of structure and these DSR levels. Okay, so 1,000 tick. We pulled down slightly through. Look at that oversold, lower high bullish divergence. Pop back up, retest of that level. And now we're off to a new structure high right here as the Nasdaq rallies. So next point of interest right here is that 43.20 as you look left right there.